So we're finishing up year 2 of the pandemic, and it's been a rough one for some people, but it's been a pretty good year for investors. Let's talk about it in our December update. Hi everybody, my name is Brian Ullman. I'm a certified financial planner and financial advisor here at Ford Financial Group. And in these monthly videos, we talk about investments and financial planning and planning for retirement. And so if any of those topics interest you, I'd encourage you to like and subscribe this video so you can be sure to not miss any of them in the future. So with that said, let's dig in a little bit. We are looking on to next year. I know we're not done with 2021 quite yet, although for some it can't come soon enough. But because we're investors, we're focused on what's coming ahead of us, right? We're not so worried about whether we're on the naughty or nice list this year, but we're looking ahead to 2022, what might be in store. And as we look ahead, it's a great time to do things like goal set and maybe even consider some things like spring cleaning for your finances as we get into the next year. So if you're doing some of those kinds of things, I would encourage you to go back and look and see if you have any of those old statements hanging around, investment accounts that maybe aren't looked at as often as they should be, right? Some statements or some accounts that could stand to be consolidated with some others to make it easier for you to manage, or have it looked at by your financial advisor to make sure that those small, sometimes forgotten accounts are still a part of your overall financial plan. I would also encourage you, and this is a very important one, to consider doing an estate plan if you haven't yet. In fact, if you're looking for a financial goal for 2022, I would say that creating an estate plan, if you haven't had one done for you yet, would be a phenomenal goal for you to pursue. An estate plan means things like a trust, a will, a healthcare directive, and a power of attorney. So it's not just one document, but you work with an attorney, an estate planning attorney, to put together a whole slew of documents to make sure that the things that happen when you no longer have control of your finances are what you want to have happen to them into the future. So there you go, my suggestion to you for a 2022 financial planning goal. So let's dig in on a few other things. I think really as we finish out the year and get into next year, there are two real points that we kind of want to talk about. I will say that in January, stay tuned for our Outlook 2022 webinar for clients. That's where we're going to do a little bit deeper dive in what we see coming for next year. But there are really two major themes that we kind of see here more immediately, and one really has to do with the Federal Reserve, and that's the first one. If you haven't heard, this week the Fed has announced what their plans are, at least in the short term, in terms of tapering the Federal Reserve stimulus and also in increasing interest rates. And on Wednesday this week, the Federal Reserve kind of came through with what many investors were expecting, which is to say, because of continued inflation, the Federal Reserve is tapering their stimulus program, and they've already been tapering it, but now they're doubling the rate of taper. So this bond buying program, the stimulus kind of program that the Federal Reserve has been on, should be concluded sometime in April of next year. And once that's done, then we start looking at what the Federal Reserve might do with interest rates next year. I can say generally the market is expecting 2 interest rate hikes of 0.25% starting in June of next year and through the end of the year. Although that may need to come sooner, and I think there's this real anticipation among investors about trying to figure out what the Federal Reserve might do, if that stimulus may be tapered even more quickly as the Fed continues to meet next year, and if interest rates need to be raised sooner or more often. So for example, if interest rates need to go up in the spring, it may need to go up 3 times next year, not 2. Those changes from what the Federal Reserve is doing versus what the expectations are right now can create a little bit of volatility in markets. And so something I've been explaining to many people I talk to is that we have been on a fantastic run really since COVID hit in early 2020, where you open your statement every month and generally it's been good news. Now granted, we've had a few small drawdowns, but nowhere near the kind of normal average volatility that we have when we're investing. So for example, we haven't had a 10% or more drop in more than a year and a half, and on average we have one of those at least once a year. And so even as we get back to kind of some of that normal volatility, whether that's caused by the Federal Reserve or something else, it's going to feel like we're getting whipped around quite a bit more than what we've become accustomed to lately. But really, we're reverting to the mean. We're getting back to average kind of volatility, which frankly is probably a healthy thing for markets and for investors. So let's talk about a second item that's, I think, kind of front of mind, and that's really having to do with politics, and especially as we get into a midterm election next year. Gosh, it feels like politics touches just about everything, even when it's not really necessary to worry about. But here we are, and it's a reality of things. And so let's take a look at how markets do generally as we get into year 2 of a new presidency, which is where we're going to be in 2022 as we get into the midterm elections in the fall of next year. Let's take a look at this first chart here, where this really breaks down by new presidents versus re-elected presidents. And it's pretty clear that year 2 under a new president historically has been quite weak. Now, then again, it should be said that year 1 is often not very good either, and that sure hasn't been the case this year. But it's worth noting that year 2 of a new presidency sometimes can be a little bit shaky, so it's important to keep that in mind historically. Now, history doesn't always repeat itself with investments, but I think it's Mark Twain said that history doesn't repeat itself, but it rhymes, and that certainly can serve as kind of a historical guide for what we might have in store as we get into next year. Let's take a look at another chart as we get into next year. And you can see as we break down by quarters, it becomes very clear that the next 3 quarters are some of the worst of the 4-year cycle before what could be a very strong fourth quarter. So this is breaking down the presidential calendar by quarters, and you can see that especially as we get into the second and third quarters of next year, things can get a little bit shaky. And of course, that would make sense as you get into a midterm election kind of scenario. You have a whole bunch of people running around for re-election telling you how bad things are and how they're the only ones who can fix it. Is that good for confidence? Probably not. And so we've looked at the quarters here, but let's pull the lens back a little bit and look at the 4-year presidential cycle. So take a look at this chart here that we have on the screen now. And what you can see is that the second year of the presidential cycle tends to be the worst of the 4-year cycle, and it's up the least often as well. So even though I think generally we expect stocks will do well in 2022, it's a reminder that it likely won't be another runaway bull market like we had in 2021. We've had really 3 years in a row of very good returns from markets, but we've also kind of been trending down. The highs aren't quite as high as they were the year before and the year before that. And so I think while we have some good expectations, modest expectations for 2022, I think those good returns are going to need to be earned because this is going to be a year that's certainly much more volatile than this year. And if you're excluding that 2-month rough patch, I guess you could call it, that we had with COVID in 2020, I think we are in for more normal ups and downs and quite a bit more than we've had here lately. If you haven't talked to your financial advisor about this stuff and need to, I would encourage you to email us at info@fordfg.com. Chat with your advisor, or if you don't have an advisor, feel free to chat with us so we can talk more about what a portfolio and what your financial plan might want to look like as you head into a period where we have rising interest rates and probably some more volatility. So I will leave it there. Again, please consider subscribing if you'd like to see more of these, and I guess I will see you in the next year.